Hey guys, welcome back to the channel. Well, obviously there's been some massive news about the interest rates and how that is affecting the markets, and in a way that many are not anticipating. We've got the stock markets to get through, the dollar, US dollar, the real estate cycle, Bitcoin, and cryptocurrencies, which are looking relatively good, at least the healthy ones. Now, of course, this has been one of the most largest collapses in price for BTC in over 2 years. I've got heaps to get through in today's video. You can probably hear the caffeine in my voice. Make sure you stick around for the entire video, hitting the like button, subscribing if you are new to the content. It's your home of macro cycle analysis. We're covering Bitcoin, cryptos, the stock markets, commodities today, and the real estate cycle, the biggest one of them all, the one that everyone misses, which basically leads us to the end of the move. As always, links in the video description if you want more content from us, absolutely free. I'll talk about that more later. Let's dive into today's agenda, a massive one, and I will get it done in under 30 minutes. Bitcoin, end of cycle forecasting. Now, I've added to this from the previous videos, which is why I suggest that you subscribe and try to follow along. I know they do get quite long, but nonetheless, there is a few little changes day to day, but overall, the macro cycle remains intact. The 18.6-year real estate and economic cycle, that's what this and E is for. We're in the winner's curse phase. If you're unfamiliar with that, I'll briefly touch on it, but I know there's a lot of you guys that have seen it many times before, so I'm not going to bore you with that again. S&P 500 breakout to new all-time highs. We got that. We're at that point now. Maybe we get a little bit of a pullback, but we did hit a new all-time high, as we've been talking about. US dollar downtrend from 2022. That's from the top. We are seeing that, but we're seeing a little bit of a bounce on this rate cut. So I've got to get that to you as well. I'm going to come back to the rest of these, including our exclusive signals that we've been showing you here on the channel, the Investor Accelerator exclusive signals. So let's just kick it off with these interest rates. Everyone's been talking about this jargon, and it feels like it's going to be the most important thing. And I always hear it in the comment section. People get a little bit triggered because I don't take it as seriously as your media personalities and other personalities that are saying the interest rates have got everything to do with the market. They freaking don't. And we've covered that analysis on the channel many, many times. I will cover it again in future videos. But for now, we've got the half point. Here it is, and what the market is expecting in the next meeting after the election, which is an interesting one. Now, on top of that, the other analysis here was the election, presidential election cycle, which typically shows the market being up through the year. 2024 is generally an up year, which is the fourth year in the presidential cycle. 2025 is going to be another big year. Okay. Anyway, the interest rates are looking like they want to cut it again next meeting, and then a double cut there in the meeting after, and cut and cut and cut and cut, and it just keeps going on and on. I think they're eventually going to be wrong. This is the best place that I have found to get an accurate, or as close as an accurate, forecast reading on the interest rates if you are so interested. You got this little orange level here, and that has been relatively good for most of the meetings. Remember that that people show, and I've referenced it, but I say that it's not going to happen. They were showing cuts in each of these meetings. See where my cursor is? They were showing cuts, 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 and it was pausing. Pause after pause after pause. That's the forecast. The orange line here is the forecast. Forecasting a quarter, we got a half. Does that even flip and matter? A history of rate cuts, cumulative change in Fed funds rate by cutting cycle, a cut with recession in the next 12 months, cut without recession in the next 12 months. That's your blue line here. Does the size of the first rate cut matter? No. Here's why. Plenty of information there. I've talked about it in many videos, so I don't want to spend too much time going into this. The main thing I'll leave you with here is it doesn't matter because of where we sit in the 18.6-year cycle. We are in the winner's curse phase. We're in the final stage of that before we get a significant correction, collapse, recession, depression, whatever it might be. I don't know, but there's going to be a pretty significant move. But before that, we get blow off top vibes. We get markets up. We get all-time highs. We get more money coming into the system. Plenty of times we've seen that. Now, on top of that, here is a quick look at some more key points here. Basically, favorable momentum shifts that are signaling for the S&P 500 and for the NASDAQ. So you can see there's a lot of text here. The main thing, what they're showing here are the the dates, well, down below here, and then the signals or the rules used to identify the momentum shift, the momentum shifting favorably to the upside. So lots of data points, what we want to see, 32 signals, going back to 2005. Ideally, I'd like more, but this is what we have here, about 20 years, 19 years. The thing I want to look at is the summary. And so we look at the summary 1 week later. Do note that I've talked about the interest rates, we've got the cut, and the narrative has shifted now to the size of the interest rate cut. It was a little there, now it's there even more. Basically the narrative of we need a cut, oh no, it's too much of a cut, that's going to collapse the markets. So maybe it does in the short term, which is why I'm showing these. 1 week, 2 weeks after this other signal, you can see that the stock market has been down 4 out of 10 times. So you've got a positive rate here, 59, 66. Bring it out to a month or two, then it's about 75%, 75%. Take it out 3 to 6 to 12 months, now you're sitting something that's a little better than a coin toss. Around 80% of the time, the market's going to be up. So in the short term, maybe a few of these signals come together like this favorable momentum indicator. You've got to look at the 20-day moving average while the S&P index is above its 200-day for the first time in 3 months. Okay, so you're layering a few of these rules on to give you this momentum indicator. Then you've got the interest rate narrative. So they're talking about these cuts and the market's going to go down. So maybe it does in the short term. So you can see just from some of these signals, it shows in the short term that it's not the greatest. Short term, 1 week, 2 weeks, a month or two. That's not what I'm talking about. I'm looking longer term here as the end of this winner's curse phase. Probably takes us out another 12 months, 18 months, thereabouts, right? And so we look further out. Reasonable signs here. It's not a guarantee. There's no 100%, of course. 8 out of 10 times is better than 6 out of 10 times that the market is going to be higher at the end of this next 12 months. Pretty good reading there. Now the NASDAQ is also similar. 42 signals going back to 1985, so nearly 40 years worth of signals here. 12 months later, 83%. Again, short term, not the greatest. 67%, 71%, 1 to 2 weeks. Gets a little better 1 to 2 months. This is what you want to see here. 3, 6, 12 months later, looking relatively good for positive results for the NASDAQ as well as what we just looked at with the S&P 500. So to finish off these interest rates, it's going to be talked about again at the next meeting. I guess people are going to expect another rate cut. Maybe it happens. The narrative is going to shift again towards the size and the speed of the rate cuts are going to collapse the markets and we're going to go into another recession relatively soon. In the next 12 months, maybe. We've talked about this so many times. Does it even matter if you are buying the market and there is a higher chance of it going higher in terms of price? That's what matters. You're trading the chart, you're trading price, you're not trading the news headlines and narratives. This is for people who just sit around and read and want to tell you something about the market that may or may not be there, and they probably don't have any skin in the game. So if you want to have skin in the game, or if you do have skin in the game, just focus on the charts, focus on what the probabilities are, and if they don't work out, because maybe 2 out of 10 times it does go down, then just know where your exit points are. And I've talked a lot about where some of these exit points could be, especially to flip the market trend. The trend is still up. We hit a new all-time high. The trend flipping at the moment is around that 46 to 4,800 points for the S&P 500. The reason for that, major 50% level and the previous old all-time highs. Now, these counts that we've been following after our TIA 3-day down signal, so the investor accelerator signal, that called this top here. I posted the video on the channel. It was around the 22nd or 23rd of July. So now going back 2 months, and showed that this signal pushes the market down and typically remains under the old all-time high. Not always, but more often than the previous moves. It happened again. We had 63 days under the old all-time high, or the previous old all-time high. Prior to that, we didn't have the signal here, but this was a significant correction in April and into May. It was 44 days under the old all-time high. So basically, the signal tells us that we're likely going to see a stronger correction or a longer correction than what we previously had seen. And the importance, the real need to know that is because at these peaks, so going back just before the signal, is usually when it's most bullish. And so when you get this correction, people are thinking, I've got to buy this dip. It's time to buy this dip now. I missed out on all of this move here. Therefore, I must buy this dip. But this dip is telling you something extremely important. And we used it in Bitcoin, and it helped us in March. When everyone was saying buy the dip in March, it was too early. And I think we'll typically you see these signals towards major peaks. So you don't buy the dip there, and you wait and you wait and you wait. You see some higher lows. Maybe this gets broken. I don't know for sure if this is going to stay in because I can't confirm that, right? But at least you're not buying here and getting absolutely freaked out when the next big move comes to the downside. And I go over this because it happens in Bitcoin and it happens in cryptos a lot. So if you can put this one into your tool chest, then hopefully you're going to stay safe when everyone is at their most extreme greed, typically around those peaks. So quick recap, interest rates, they've been cut. The stock market hit a new all-time high. That could be short-lived. Maybe we see a bit of a correction. Maybe we hold up on top. I don't have the answer to that. I've given you the answers to everything else here, or at least the probabilities. But for now, we did see a new all-time high when most were hoping and calling for recessions and major collapses. The price is what matters most. That's the S&P 500. The NASDAQ, bit of a push higher, but it's still at a lower price point in terms of percentages from the all-time high than what the S&P is. So a little weaker there for the NASDAQ. However, you still have a trading range between 17,500 and 21,000 points. So it's still just in this trading range, even if the emotions get a little bit crazy day to day. The Dow Jones, new all-time high again yesterday after Tuesday's new all-time high. Maybe this thing consolidates above 41,700 points, which are the previous tops. We'll wait and see on that. If that's the case, that would be a stronger signal than falling back underneath to consolidate. Moving on to the VIX, it's also had a little bit of a spike, a little bit more volatility coming in. As I said, September's spike would be forgotten, and we obviously had the yen carry trade fear on the spikes of the volatility index. It's going back to what it does best. One thing to note here are the higher lows at the moment that are forming on the VIX. We've seen that before. You can see multiple higher lows getting into a final peak, so the volatility increasing. This was that move through the previous correction of 2023. So the S&P was heading down for those months, then spiked right here into a low, and then basically ran out to new all-time highs. So we'll keep an eye on that with these higher lows forming. Maybe we do get another spike, and it takes a little while to drop off, okay? Next thing, gold. New all-time high, closed lower on interest rates dropping. Normally, you would expect the opposite. Interest rates dropping, fear of recession, money moves to stable assets or risk-off commodities, right? Gold didn't happen in this case. Maybe that's something to keep an eye on. It is short-term. It's only a daily chart here, but we do have an all-time high and a lower close here beneath all of this previous price action. So keep an eye on that. So maybe it's not as fearful longer term as most people are anticipating. I'm saying the next sort of 12, 18 months, probably going to be pretty damn good. 2025, pretty good. And maybe that means that people leave gold. We'll wait and see, of course, but maybe that's the possibility because this isn't as a risk-off time in the next 12 months because, again, more higher prices coming. The US dollar also dipped under before bouncing higher, so some strengths coming back in the short term. Overall, I still see this going down as we looked at from our agenda here, US dollar downtrend. This is still short-term stuff here on the daily, but might get a little bit of news headlines because of the move that it's had over the last couple of days. Overall, maybe we come back, test those tops, 101, 102.3, or even 103. Any rejections under this level, I would say, would be further downside, which would also be good for asset prices. So that leads me over to Bitcoin and cryptos, and we're on track to finish this video before 30 minutes is out. Neutral, still on neutral, but Bitcoin's had a massive close yet again. We had one close here on the 8th of August, back under the 50%. We had another daily close above the 61,500, back under the 50%. This was a weekend, so I don't class those as strongly because the volume is less there. So it could be like a weaker read. So you got a Friday close, a Monday close on the way down, and then it fell back underneath the 50% level. A few little alerts going off here, which I'll get to in just a moment with the altcoin update. And now we have 1 day above the 50% again with a potential higher low forming here, which is really, really important. So in terms of the fear and greed, which is something that I've been covering here, I've made mention several times, especially on X, where you can see these lows forming in the market on extreme fear, and then the price begins to rise, while I guess a lot of people aren't necessarily watching the market, or they're expecting lower prices because of some other narratives that are coming out. I guess I pointed to this being a pretty good area for a bottom to form, and it takes time. I did not call $49,000. I did not call a massive Japanese yen carry trade fear, right? The point that I've been making is we had our 3-day down rule, our signal came up here, high chance of downside. Most people were buying up this low, and then they've had to wait a disgusting 6 months for price action to get back to that same point multiple times. So it's just a lot of fear and greed and emotional churning, which drives people to get angry. It drives people to get fearful. It drives people to leave the market. That's what this is about. That's what that emotion is about. And I just try to be level-headed and keep the emotion out of the game, or at least just have rules and stability within the market so that you can remain in the game, because it's not necessarily, well, I mean, you need money to play the game, but as you know, it comes down to your emotions as well. If your emotions aren't stacked up to this, with the grinding higher and the pumps lower and all that sort of stuff, you basically get wiped out of the game. So let's just leave that as a bit of a discussion point for later on and get back to the charts here. 65K is the next key level. Should Bitcoin be able to hold above 61.5, 65K is a really, really important level now. The reason for that goes back to our other signals, our other rules, overbalance in time and overbalance in price. That just means that the market is now doing more time and more price to the upside than what it had done in each of the corrections. And so what that means is you've got more interest from investors, more interest from traders, more interest from anyone looking to buy and hold for a longer time and then buy at higher prices. That's what leads to an overbalance in price and time. That is an extremely strong signal for the market trend changing. So what this means is for the price now to hit above $65,000 in this current move without hitting a new low. So we've got a low at 49,000, provided the price does not go below 49,000 and gets above 65,000. Any amount of time, we hit that signal of overbalance in price and time. So look at the low to the current top, it's at 6,000. So if we can get to 65,600, that would take us a higher move up in price, and we're already beating that in time. If it happens today, that's going to be 45 days. I'm not saying it does happen today, but I'm saying if it did, like the earliest possible best case scenario, it hits it today at 65,600, that would be price at 16,600 move from the low, and it's taken 45 days to do it. You can see in each of these previous moves to the upside, that was 37 days and it did 15,500. And this move from the low in July was 24 days and it did $16,500. So again, the earliest possible case could be today. If it happens over the next several days, that's absolutely fine. But if we get to around 65,500, 66K, then we've got an overbalance in time and price. Even if the market does pull back, if we get this move up and it pulls back, you're going to get fear again. You're going to get people freaking out. Oh, you said this, that, the other. It's not going to go back, yada, yada. That's not what I'm saying at all. We're just looking for momentum shifting. That's your soundbite. Looking for momentum shifting. And that gives you the objective data. More days up, more price up than anything in the previous correction. There's your mini masterclass about the potential changing of trend as we looked at with the 3-day down. We're at day 189. Probably heard me say many times before, 4 to 6 months underneath the old all-time high. We are there now. We're in that 6-month period, or in the 7th month period. And in previous corrections, like we saw in 2017, we had a few of those times where it did take roughly 200 to 210 days to get back to new fresh high prices after a significant pullback like we did in June 2016 and started to break higher there in around November, December that took out those tops. So that lasted that sort of 6-7 months before you got to this next breakout point. So we've covered quite a few things now from the agenda. Point 1, point 2, point 3. We're basically down into a few of these exclusive analysis tools that we've used here on the channel. We've also talked about real estate continuing higher into 2026 many times. We're seeing that across the board. And then a pretty explosive or exciting Q4 2024 and Q1 2025, a price point to look out for. So that's what I'm going to talk about next. And basically the largest collapse that we've seen for Bitcoin since the bear market. Top to bottom has been $24,000. 2 years ago, you had around that same sort of price point or a little more here, 48K down to 17K over those few months, so $30,000. That was from March into June. So the biggest collapse that Bitcoin has had in over 2 years looks like it is trying to grind out of that price point. And especially now for September, we're on the verge of a green month. Still 12 days to go, but we're into this green month period. So let's throw a few of these lines on the chart. There's your 6 months, 6 months again. I've looked at these consolidation periods over the course of Bitcoin's entire history and what it leads to next. Generally, massive breakouts. You got a little breakout here from $500 to $800. Not 100%, but still a pretty decent breakout. Consolidated again and then went higher. But nonetheless, with these big consolidation moves, if it can get back to that top and we don't break that next low or the previous low, then this could be a very significant move to the upside. Michael's done a fantastic video on his channel. I'll leave a link to this in the video description that you can go and watch after this video. I've got a little bit more to get through on altcoins here, but Michael goes into great detail why this could be another very significant move to the upside before a major collapse. And if this is the case that we do see a big move to the upside, I'm going to have to start to get a little bit bearish, but not too soon. I'm going to back to this. Defense versus offense for your money to take profits. I talked about this in a sort of February, March period, and it resonated with a lot of you. So I'll bring it up again before we get into the big peaks. Defense versus offense. Defense is protecting capital. Offense is deploying capital. Most think or feel that when the market's moving up strong, fast, hard, and it's exciting times, then it's time to play offense. You know, you're out there, you're in the game, and you're deploying capital, putting this money into the fucking game, right? I think it's the opposite, or at least that's what I do. You can do whatever you want, but I'm just sharing with you how I think the game is best played. Defense is protecting capital. When it starts to get into these big moves and prices going up pretty crazy, that's the time to defend your positions. And the most difficult thing is you're never going to get the top, so don't worry about that. But at least if you're taking profits on the way up, then when the market does eventually come down, and it can take 6 to 12 months like we have seen here, it's not going to feel as bad if you missed out. Sure, you're not going to get the top. I've said that so many times, and that's just the case. I don't get the top, I don't get the bottom. I just get somewhere around this level. And yes, sometimes I get on the trend as it's starting to head up because I like to trade with the trend. Nonetheless, offense is deploying the capital. So buy it. Buy it at these low points, 20K, 25K, 50K, under 60K. That's offense. We're in offense mode, but we are going to switch into defense mode as we break out. It doesn't mean that you just stop, but it probably means don't deploy as much as the price starts to increase as what you have done at these levels. Many are going to miss out on these levels. It happens every single time, but just make sure that you're on the right side of attacking here. It could be a defensive play in the next several months, maybe 2025, okay? Last thing here is the total cryptocurrency market cap. I'm going to leave it short and sweet. We're at month 21. Last cycle took 23 months until there was a significant breakout at the next tipping point. We've hit and rejected off the tipping point once. I think over the next couple of months, leading into Q4, Q1, we could get on the verge of hitting that tipping point once again, but we have a few levels to get through first. Mainly 450 billion, 500 billion, and then your 50% levels at around 600 and 650 billion. So plenty of room to grow here, but so far it looks like we've put in some pretty solid lows for August on the total cryptocurrency market cap, excluding BTC ETH, and from our TIA indicator here, excluding stablecoins. Like and subscribe. Thanks for hanging out with the biggest noses in crypto at Singapore Token 2049, Rich, Nick, and myself. And if you do see me at the convention, feel free to say hi, as many of you have done. So thanks very much for that as well. And letting me know about what your favorite parts of the videos are. Most importantly, you've loved the 18-year cycle. That's been one of the highest comments that I've heard from you guys in person. Like, subscribe, go and check out Michael's video after this. I'll leave a link to it in the video description, and I'll see you guys back here at the next video. Till then, take care and peace out.